Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and also subscribe. And all these option videos are sponsored by myself. So these are the weekly trade zones for the S&P Emini futures. $50 one-time payment for a lifetime subscription. I've been doing these for about 7 or 8 years now. And every weekend I send you all these trade levels. Again, $50 only. Go to daytradingfearless.com or click the link down below in the description. And also make sure you check out my Patreon page at patreon.com/daytradingfearless to follow along with my trading portfolio. So, with that being said, let's jump into the option video course, and I hope you guys enjoy it. And thank you for watching. In this video, we're going to talk about selling cash secured puts. Now, this is very, very similar to selling puts, okay? The only difference is you have to put up the full value. So let's kind of look into it, right? Just like selling a put, market opinion is neutral to bullish. Cash secured puts are basically the sale of a put with the cash to cover the full stock price if it went to zero. This is usually done in either a cash account or a IRA, Roth IRA, something like that type of account. Okay, you essentially put up going back to the old scenario, we're selling the 20 puts, we collect $1. We would need to put up $1,900 in cash to cover the stock when you sell the $20 puts and collect the $1 of premium. So the example would be sell one XYZ October 20 put for a $1 credit. Our max loss would be $1,900 or $19, right? Because the stock can only go to zero. So from the 20 minus our dollar we collected, we have to put up the full amount. Our max profit is $1, and then our break even is if the stock closes at $19. Anything below, we start losing. Anything above $20, we keep the full $1 of credit. So here's an example. XYZ is trading at $20, and you will sell an October 20 put and collect $1 of premium. You will also put up the full value in cash of the stock price. So $2,000 minus the $100 you collect equals $1,900. Your break even would be $19 with a maximum profit of $1, and maximum loss would be the $19 if the stock went to zero. So that is a cash secured put. Again, pretty much the same exact thing as selling a regular put. The only difference that there is you have to put up the full value. When you sell just a regular put in the margin account, you're only putting up, we'll say, $300 on a trade like this. So you're kind of selling the put on margin. So that's it for this video. We'll see you at the next one.